You are listening to chartingwealth.com for Tuesday, the 2nd of October, 2018. Our book is available for sale. You'll see links in the show notes to purchase it. And at the end of this daily review, there will also be a video about the book. We also have some special training videos for you on how to fill out your daily market worksheet, on trend lines, and on the DO, that's the derivative oscillator, which is our minor indicator that we see on the second set of our charts down at the bottom. It's depicted by a green and red boxes that, again, many times correspond to the price percent oscillator, but give us interesting signals. We particularly use it in short chart trading. But let's jump into these charts. I do have a bit of a warning, a concern that I have. I'm going to be traveling out of the country starting on Wednesday actually. And I am hoping that I will have a decent internet connection and continue to provide you with timely daily reviews and a weekly review over this next weekend. I will be traveling in Europe, so I'm hopeful that all that will work. We'll have to pray the technology holds. Also, we did do our quarterly chart review. It was sent out first to all the purchasers of the book, and we're going to be sending it out to everybody who is a subscriber. So if you're not a subscriber, you really need to see that quarterly chart. It has worked for the last 20 plus years to get you in and out of the market on the S&P 500. Again, for your long-term practice trades. I'm giving that caveat. We're not a stock calling service. You don't pay us to provide you with investment advice, and we are not providing investment advice, but we want you to train with us and practice. And this is the biggest chart that we practice with, the quarterly chart. And we just finished up the third quarter of 2018 and have now launched, as far as on October 1, the fourth quarter. So things are looking pretty good as far as the quarterly charts go. So I want you to have that. Go ahead and subscribe at chartingwealth.com. Let's jump into this market. What do we see going on the S&P 500? In fact, we see stocks are up for the day, bonds and gold down. The S&P 500 had started the week off with a green up candle, price movement just above that weekly trend line. However, just a little warning here. Remember, all market crashes occur in October, and we see the price percent oscillator actually headed down, even though the market starts off with an up candle on the Heikin Ashi candlestick, up 0.33% for the day. Derivative oscillator continuing to lose momentum. So that's a bit of a concern going into October. We see the first, we finished up on Thursday. Yes, we see the first day. The completed two-day candle for the first day of the week is a green spinning top. Price movements above the weekly trend line. However, again, we see the price percent oscillator negative and the derivative oscillator negative on that two-day chart still. We look at the 4-hour chart, moved up big in the morning and paired off in the afternoon and still hasn't crossed over going up. Could happen over the day on Tuesday or Wednesday, but hasn't happened yet. Let's continue to see how the markets move. Now, something that we've been paying a lot of attention to is we had a weekly vertical crossover back on the week ending the 21st of September. Over the prior week, we had a green spinning top, means indecision tending up, and the first day of the latest 5-day candle, a green up candle. Price percent oscillator still negative. Derivative oscillator has flipped over barely to the positive. So we'll continue to keep our eye on things, see if the market's just sliding sideways, getting ready to go down or not. Price percent oscillator on the 2-day chart is heading up, hasn't crossed over yet. But again, we have two green candles in a row. That typically portends strong up movement. Price is actually moved above where it was back on the 5th and the 7th on those red down two-day candles, so sort of bouncing off perhaps. Derivative oscillator still negative, but just barely. We take a look at that 4-hour chart. What do we see? We see up movement in the morning, pairing off in the afternoon. Price percent oscillator flat, derivative oscillator losing energy. So again, if we see a crossover going down on this 4-hour chart, of course, we would be looking to jump in on a down move. Don't know if that's going to occur, but our weekly vertical crossover happened back a couple of weeks ago now, and we have had the 2-day chart remain in a down move. So again, we're just waiting for a rollover on the 4-hour chart if that occurs. So be ready to pull the trigger on a practice trade on the NASDAQ 100 QQQ. Now we go to bonds. Bonds have been in a confirmed down move since we had that weekly vertical crossover back on the 14th, going into our 3rd week of nice strong down movement. Price percent oscillator heading down, derivative oscillator heading down. What do we see on that 2-day chart? It actually has been sliding sideways now for 4 days. Latest 2-day candle is a red spinning top, means indecision, tending down. That price percent oscillator spiked down. However, the derivative oscillator is losing downward momentum on the 2-day chart. On that 4-hour chart, looks like things might be crossing over again for a down move, jumping into another down move. So keep your powder dry for a potential inverse trade. And if you don't know what inverse trades are all about, if you're watching on video, we've linked right up there for you a training that you can go to and take. You can also just look it up at the website or on our YouTube channel, Inverse ETFs, How to Make Money When Markets Crash. So we see that the 2-day chart, or the 4-hour rather, looks like it's moving to a crossover going down. If that does occur, that'll allow you to pull the trigger on an inverse trade on 20-year bonds. Okay, we go from bonds lastly to gold. Oh, and by the way, bonds down 0.96% for the day. Gold down 0.18% starting the week off. Red down candle pushed through the 2-day trend line. However, gold just keeps trying to cross over going up. Derivative oscillator's gone positive. Price percent oscillator not quite crossing over. Is gold bottomed out? Don't know. We'll continue to watch and see. We see that the 2-day chart, again, hasn't crossed over yet. Derivative oscillator losing momentum. Price percent oscillator about flat. We see the latest 2-day candles are down. Price movement, of course, is well above that weekly trend line, has pushed through the 2-day trend line. So we'll just continue to keep our eye on things on gold. What do we see on that 4-hour chart? Really sliding sideways, some down in the morning, a little bit of recovery in the afternoon. Price percent oscillator pretty much flat, little down. Derivative oscillator losing downward momentum. So again, will gold bottom out? We'll continue to watch it, keep you posted. Folks, that's where we are as we end the day. Keep your eye on the NASDAQ 100 QQQ and 20-year bonds TLT. QQQ for a potential down move, 20-year bonds for a rollover on that 4-hour chart and a down move also. That's where we are, folks, as we end the day on Monday, go into Tuesday. God bless. All the best from the whole team here at Charting Wealth World Headquarters. You have questions, problems, concerns, all you have to do is email us, cw@chartingwealth.com. All the best.